Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everybody. Welcome back to another live stream. Happy Monday to you. I hope you're doing well. I hope you're well rested for a new trading week. Volatility is still quiet. We still don't have a ton of movement. You do have a little bit of movement in gold. Gold's lower today. Definitely interested to see what happens there. I would love if gold could just do me a quick favor and kind of push lower for a little bit. That would be great. Maybe come down and test this area of support. 3270 or so. Would love to see if I could get long gold down in that area. I do have a bias to the long side on gold, but I've been saying on the channel, what I'm looking for in gold is a pretty clear binary sort of either up and out kind of trade setup or a move lower into the bottom end of this range, in which case I think that also would be a trade I'm interested in. So I am bullish on gold. I'm looking for longs. We'll see if I can get anything set up there. If I were to get long gold around this area, I'd be looking at stops below structure here, and I'd be looking to honestly try and catch the breakaway movement higher. You do have a little bit of downside movement here this morning. Gold's down 1.26%. You have silver down 1.4. Same scenario for silver. I believe I also have a, gold and silver are both getting bullish readings within the Edge Finder. So I've got gold as a +6 score, and gold is a +8 score, silver as a +6 score. So both look attractive to me on the long side. Any fundamental reason for bullish gold? Yeah, I mean, so I'll break it down as to why I like gold longs right now. First of all, technicals are they're not set up here for a trade today. I do like the big picture trend of gold. Like, look at the weekly chart. This is a chart I don't want to try and short. It looks very strong. This can keep going for much longer than people think it can. If you're a long-term investor, maybe you don't want to necessarily buy up here. If I was buying it to hold it for 10 years, I'd prefer to wait for, a true down move for a couple of months. But who's to say when that's going to be? I mean, momentum right now for traders, in my view, favors the upside on a, couple month basis. So why am I bullish gold? Well, to oversimplify it, sentiment here on the Edge Finder is identifying gold as getting a bullish output. Let's do sentiment for a second. What would be considered sentiment? Well, first and foremost, we can track institutional positioning and see what's up with gold on here. So we can see gold has a very, what this is showing you for new viewers, this is a way to track institutional positioning via the Commitment of Traders report. We've built a simple viewing portal, if you will, to check out the Commitment of Traders data to see what institutions are long and short. And so institutions are very bullish on gold and on silver, by the way. They have very heavy allocation to long positioning on gold. And in the latest weekly filing, we did also see some pretty heavy accumulation of gold longs. So if I'm taking a look at gold, we saw an increase in long contracts and a decrease in short contracts. This was a very net bullish reported week for gold. And so to me, that tells me there might be something happening under the radar here. There may be some accumulation with the attempt at breaking through that 3,500 level coming into play. I would not be surprised if the next wave for gold is a move higher. I am interested in longs, like I said, but would have to get a technical pullback or a breakout and retest to get into a long position. So I'm just watching it right now. The other thing is we can take a look at the put to call ratio for gold and see right now that it's neutral, which the way we have calculated this is that if the put to call ratio is neutral, it gives you a +1 by default. Gold tends to drift higher over time. If it goes to an extreme greed where people are highly buying calls, right, then it gives you a bearish reading on the edge finder on sentiment scoring of -1. And if it goes through the roof here, where people are like over here, here, what that's showing you is that people are buying a lot of puts when it reaches that high extreme threshold, which we've done this based on standard deviations. Our blue and red line are our kind of movements there. If you get an extreme reading, it goes ahead and gives you a +2 scoring in sentiment. So right now we're getting a +1 on a crowd sentiment based on the put to call ratio, just kind of being slightly or just around neutral. So we'll see. Okay, yo bro lyrics, please don't spam the chat. Do you have a Telegram channel where you give signals? We offer a paid signal service. If that's something that you're interested in, you can find the information in the description. Send us a direct message. We'll drop the link in the chat if you'd like to speak to our team about that, if you want to get access to our signals. But do me a favor, just because I'm trying to keep an eye on the chat, don't spam your question. It does not, makes it hard for me to see what people are asking. And yeah. Gold's been hit with tariffs. Don't you think we'll be bearish? So if gold got hit by tariffs, gold's going higher. Actually, that's an incredibly bullish thing because it makes existing supply of gold even more attractive. Gold is, gold, part of the reason it shot up during all the tariff uncertainties, there was a lot of gold being heavily imported into the US from like the UK, etc. during all of the uncertainties around it. Anyways, oil prices up 1.3% this morning. Nasdaq's just a little bit off of its highs. Nothing too big here. Kind of a quiet morning for most things. Metals are moving. Metals are the only things that I'm seeing some movement on this morning. Bitcoin. Look at this. Bitcoin tried to make a run for the previous high around it's around 120 this morning. Yields are lower. Euro dollar lower, pound dollar lower. Let's take a look. Do you recommend Blueberry Funded? I'm not sure anything about Blueberry Funded. The prop firms that I recommend are the ones that support our channel. They also are ones that I really like what they offer. If you'd like to check out DNA Funded, maybe we'll drop the link here in the chat. We offer, or they offer subscribers of my channel. You can get 20% off with the promo code A1T20. So we'll drop the link here in the chat if you want to check out DNA Funded. But they've offered subscribers on our channels 20% off with this promo code A1T20. Just punch that in at your checkout and you can get discounts on all their stuff. It's pretty cool. One of the biggest things with prop firms is make sure you're using, like, I had a long conversation a couple weeks back when I did a podcast with a friend of mine who's a big prop firm guy. And he made the point that discounts and opportunities to get low costing prop firm things, like that's part of the skill, part of the strategy of prop firms is get discounts. So again, our sponsor DNA Funded has 20% off for our subscribers. If that's something that you're interested in, if you're interested in trading with prop firms, check them out. Dollar CAD is moving higher here. I've actually been on I went from having I could take 3 trades a day for a little bit there to now I've been struggling to find as many trading opportunities the last week or so. So let's see if we can find anything today. So I'm going to look at some currencies for just a second. So Euro Aussie, Euro dollar, Kiwi dollar. Let's just look at all three of those really quick, see if there's anything that sets up. So Euro Aussie, I've been looking at this one for a possible pullback play. Would love to get this at the bottom end of the range. So I'm watching this week. If you give me a shoot lower in the Euro pairs, that would be interesting. NZD USD, this might be a play for me, although I'm already long NZD CAD. But I may take this trade, NZD dollar, New Zealand versus US dollar. Let me just look into that for a little bit. PMIs favor New Zealand here. Unemployment rate. It's not like a strong reading, but it is a reading. So Kiwi dollar, I kind of like to the long side. Let's see what else. The Australian dollar versus the New Zealand dollar on the short side looks kind of interesting. I may add a second trade to my position. I already am short here. I'd potentially add a second short and look for the leg lower. That could be something of interest. Euro pound. I'm stuck in my Euro pound shorts, although I might be able to get out of this pretty soon for a small loss. I took a short here, took a short here, took a short here. If this thing were to leg lower, I'd probably just take a small loss. This position is a very small one for me. I'm in like at this point, it's probably like a 0.5% drawdown or a 0.6% on my account drawdown. So I have 3 positions, but they're tiny ones. Euro pound to me looks a little bit like it wants to maybe come down and test this area of support. If it does that, I might just close the trade because I do think that Euro pound could continue to move higher. And I'm stuck in some short positions, so I may look to get out of that. CAD Swiss is another one I'm stuck in, but this one looked promising. If we can get a move higher, if you come up and test this area of support, this resistance level, this might actually be an area in which I just close out the trades, take my loss. So I've got, this is something that I talk about. I posted a video over the weekend about this. When I get stuck in a dollar cost averaging situation, naturally I get teased about it, right? Because people are like, oh, why don't you just use a stop loss? Well, again, sorry, hold on. There's pros and cons to everything. Sometimes people are like, oh, you're not managing risk without stop loss, which it takes one chart to tell you why stop losses are a false. And again, I use stop losses in a lot of my trading, but let me show you something. If you ever want to know, is stop loss truly protection? Here is your answer. The answer is absolutely, positively not. You can think your risk is protected with a stop loss, but this event here, what the heck happened here? Well, long story short, there was a big central bank announcement, in which case the Swiss National Bank sort of said they were going to peg their price against the the euro at 1.2. Then they said, never mind. And the thing dropped in seconds, thousands of pips. And if you think you had a stop loss right here and it got respected, whole brokerages went under because of this move. But this move, do you know where your stop loss? Let's say you went long here and you put a stop loss here. Do you know where your stop loss got filled? If you're a huge advocate of like, oh, always have a stop loss, I get it. But I'll tell you, there's a better thing than stop loss. It's small position sizing. Because what happened here, let's say you had your stop loss here. Like, okay, if it drops, I'll just get out. That's not how markets work. Stop loss orders are orders to the market that say, give me the next available price if we cross this line. Well, guess what? When this happens, do you know what the next available price is? Right here. Because all of a sudden there's a gap lower where there's no buyers. There's nobody who will take the other side of your position, right? So guess where you get filled? If you have a stop loss, you get filled here. So if you risked $1,000 on this trade, right? Do you know what you ended up losing? Well, if this is 0.5%, this is just quick math. You could do the math. It'd be huge. Be like 20 times what you thought you were going to lose. So whole brokerages blew up during this. When this happened, I mean, countless traders lost life savings. If you were super long with a stop loss, if you're using a bunch of leverage, you're long Euro Swiss, and you got gapped down on this, you lost. People ended up owing tons of money to their brokerage, thinking, "Oh, I've got a stop loss, I'm protected." It's stop loss orders are not a guarantee that you're safe. There's no such thing as a guarantee. Well, there are guaranteed stop losses, but you're going to pay a lot of money to guarantee a stop loss. There are brokerages that offer guaranteed stops, but instead of a 1 pip spread, you might pay a 10 pip spread for a guaranteed stop, right? Because you're buying insurance. That's essentially what that is. If you want to pay up and work with a brokerage that offers fixed or guaranteed stop losses, you can do that, but you'll pay an arm and a leg for the spread of doing that. So my point is, you know what the best protection is to your account? Small positions, not stop losses, small positions. Because small positions, you could potentially survive this event if it happened to you. Tight stop losses with high leverage, you're not surviving that. You're going to blow up, right? So just something to think about. I don't say that I think traders need to be aware that that sort of thing can happen, and it can happen again. We could have a flash crash where you get 2,000 pips in one direction. So just something to think about. Hey, Nick, what would make the U.S. indices sell heavily? Well, a lot, because I tell you what, there's a lot very strong going on for the indices, which is strong corporate earnings. We're looking forward to rate cuts in the U.S. There's a lot of tax breaks coming from the administration for businesses, which they like. So, to me, it's like, I'm not holding my breath on trying to be bearish on indices, right? They look really strong. I'd be a buyer if it pulled back. If you got this move or this move here, or this move here, these levels look like buying opportunities for me personally, not financial advice. That's what I'm looking to do. Give me that opportunity, I'll probably buy some. Nick, I've been hearing talks about stagflation coming in. What are your thoughts? It's a valid concern, right? For those of you who don't, or you're not sure what stagflation is, let's talk about stagflation for a second. Stagflation is stag inflation. We can break it into two things: inflation being high, and stag, or slow growth, essentially, in the economy. So worsening jobs numbers, slowing GDP statistics, plus rising inflation. This is a nightmare for a central bank to deal with. Do we have that going on in the US? Not nearly as bad as like the UK. UK has it worse. I'll show you. The UK has got it worse than the US on this front. So here's what I mean by this. Inflation in the UK is at 3.6%. GDP growth in the UK is minus 0.1%. Now, we could look at growth projections for GDP in the UK. We have that stat as well. In fact, let's do it, because that's what we do on this show. We dive into the details. So if I'm looking at, let's do UK, right? So I want to look at UK. So the UK economy is expected to grow 0.7% in Q2, 0.2% in Q3, 0.3% in Q4, right? So these are growth projections. We have this within the Edge Finder. It's a relatively new feature. You can look at this if you have the Edge Finder under economic growth data. You can look at growth forecasts for various countries. It's a really cool feature, and I highly recommend that you do this to get an idea of where projections are for growth. But we have 3.6% inflation in the UK, and look at growth projections. They're not very good. My friend Johnny, who I do the podcast with very frequently, we talk about this very often. It's a real struggle for the UK economy, because that's stagflation stuff. You're talking about 3.6% CPI. That's not a low CPI. It's not a high. It's not like as bad as where it was a couple of years ago, 10%, but it's still high inflation relative to the 2% target. And it's especially high when you consider that the UK economy, this is not inflation because there's a roaring economy. It's inflation because of other problems, right? and you have growth that is not attractive. It's like 0.2% in a quarter, 0.3. Compare this to the US, and we don't have nearly the stagflation problem. 1% growth projections, 2.1% for Q4, 1.8%. Like there's growth in the US. Put it this way, I'd way rather lend money to the US than the UK. Not to say that lending money to governments is, an easy thing, but I'd rather lend money to the US economy than the UK economy. Right. So, anyways, when we look at the US economic heat map, we can look at some stats and we can say, okay, well, what about the US? Well, we have 3% GDP growth and inflation that's at 2.7. Is the direction of growth slowing and is inflation rising? That's what stagflation is. GDP growth seems to be doing pretty well, especially compared to forecasts. We've had some good stats. Now, there's been some lackluster stuff. Jobs data was not great. PMIs are not great. So there is a little bit of worry about slowing growth. And there is the possibility that tariffs cause a rise in inflation, but we have not really seen a material sign that like tariffs are some huge inflation cause. We're not seeing that. And again, the news headlines will tell you one thing, but the stats here are what we care about. And right now we're not yet seeing that. Could it change? It could. And we'll be the first ones to address that if something changes. But right now we don't have sky high inflation. And guess what? If we did, this market would not look like this. If you had inflation that was not looking promising, or if the market was sniffing out that, the tariffs were really, really going to cause a huge spike in inflation, most likely the market would already be lower. Now, it's possible that changes and we see the development of that over the next few months, and perhaps that sends the markets lower. And if you want to make that bet, you obviously can. That's what the markets are there for. But for me, I'm not willing to make that prediction. And what gets people all riled up about Jerome Powell is that the Fed seems to be making that prediction. And the Fed's not supposed to make predictions. The Fed's supposed to be look at the data, make a decision based on the data. Look at the data, make a decision based on the data. They're supposed to be looking at the data and making decisions. And so that's the gripe between Powell and Trump, which I think, again, I don't agree or disagree with everything that Trump is doing. But in regards to interest rate cuts, I think interest rate cuts are appropriate now. And I think we should have. Personally, I think we should have cut in July because we've been restrictive, and the jobs market has shown signs of cooling. So I think we're going to get cuts in September. I think that we're going to see possibly 2 or even 3 rate cuts the rest of this year, depending on how the data falls. So point is, regardless if it's 2, if it's 3, whatever, the direction of rate cuts seems to be positive. Like it seems like we're going to get some rate cuts. And so to me, if gold dips, that's a buy for me. Also, if we see material weakness in the economy, if that worsens, the U.S. economic heat map is showing softness in the dollar. If you get any softer from here, I am probably going to be even more bullish on gold. I'm already bullish on gold. Would like to see it, as I mentioned earlier, give me that pullback into this area. I'm probably long. Give me a breakout here. I'm probably long. So I like gold to the upside. It's probably my favorite setup right now if we were to get one of those technical moves. And in the meantime, that might just mean I'm waiting, right? I'm just going to sit around and wait for the opportunity to get involved in gold. I'm not going to place a trade here just because we've been really choppy on gold. I don't like this technical chart very much, but I think the risk to reward is worth it if you saw the bottom into this range, because I think over the next few months, I think gold could go higher. And I could be wrong. Something could change, but that is my bias at this time. And I'll trade accordingly. So it is a top setup for me at this time. And we'll see where that goes. By the way, we're giving away a copy of the Edge Finder this week. If you do not already have a copy of the Edge Finder and you want a chance to get one, here is some cool information for you. We are dropping a free to join giveaway in our Telegram channel. In fact, I'll do it right now. Our support team dropped this on Friday, I think. But if you're not in the Edge Finder giveaway, join the Telegram channel. The link is we'll drop it in the chat here. Take a second, join the free Telegram channel, and you can enter the Edge Finder giveaway for a chance to win. Click this link, join our Telegram, and then just fill out this form to enter your name for a chance to win a copy of the Edge Finder. Start tracking all this data, keep it all on your radar, start trading with fundamentals, with sentiment, and with technicals. Go beyond just having a technical chart that you're staring at all day long. Start using the real world data that is impacting this stuff, GDP growth projections, inflation statistics, what the Fed's likely to do next. All that stuff can be found within the Edge Finder, and it is a all-in-one kind of tool for traders who are trying to pick up the macro or the fundamentals and incorporate them into what they do. Again, it is free to join the giveaway. All you need to do is click this, join the free Telegram channel, and then fill out that form that's just been dropped in there for a chance to win. Okay, let's see. I would love to see indices move lower here for a few weeks. I think we've had just an exceptional run. It's been a really hot run for indices. We've had very little pullback since the lows. It was the ultimate kind of, they call it a rip your face off rally for a reason, because it's just like if you were short into this and you were caught on the short side, there was no escaping the bull run onslaught, right? Once this thing started ripping higher, there was no opportunity to get out of a short position if you were waiting for, like, oh, I'm going to cover if it goes back down. There was no opportunity. And that's how these things go. This is how the indices work. They thrive off of climbing the wall of worry. When everybody gets really scared in indices, that's when you typically see these just powerhouse moves, and they're just squashing all the shorts, right? Everybody who is short on this market, the squeeze happens, and it really can just keep going for a period of time. That being said, what then ends up happening is people start to get a little bit euphoric. We saw this in the put to call ratio. There was a huge surge last week in call demand. So if we're looking at gold, but let's select for SPX. Look at this. So last week we went all the way to the bottom end of the put to call ratio, showing a high call demand. What that just means is that the volume of calls in the options market went through the roof. People were buying calls like crazy last week. And so to me, that signals, okay, crowd sentiment is getting a little bit frothy, a little bit euphoric, a little bit overly bullish or greedy, take your pick, whatever word you want to call it. But we've seen that swing in sentiment. And so to me, it's like, okay, if you get those, what I've been doing in those moments is I'm selling calls. If you're unfamiliar with options, then I'm not going to deep dive into it, but essentially I sell calls on the market. You can do that. You can sell people calls just like you would buy a call if you think something's going up, or you can buy a put if you think something's going down. You can also sell a put or sell a call. So when this gets overextended, I am finding myself doing more and more covered calls, selling calls against my positions, sort of doing that. And then also just sitting a little bit, building cash, waiting for a drop. And at some point, you'll get something in the opposite direction. At some point, you'll get a big spike in fear again. It always happens, and it may not happen when you want it to or as soon as you want it to, but at some point, you will get a drop, a considerable drop, 5, 10, 15% in the NASDAQ, just when everybody thinks it's never going to drop again. That's how it goes. The game is kind of simple on the NASDAQ, although not simple when it's happening. It's a simple process, but it's certainly not easy to buy the market when it's selling off a cliff. And it's certainly hard to watch it go up every day and feel that you're missing it, right? So I have plenty of stocks that I'm long, but I have in recent months, I've gotten more, or recent weeks really, I've gotten more cash heavy. I've sold out of some positions. I've sold calls against some of my stocks. So I am more poised for a drop in the market. If it keeps going, I'll still be in positions that look good, but I would prefer to get some sort of cool off for the next few weeks, give me an opportunity to get back in at better pricing. So we'll see. But that's my thoughts on indices at this time. It's a setup for me, but waiting for a pullback. Is the Edge Finder giveaway offer also in the free Discord? No, it's not. But I'll drop it in there too, just because some people prefer to be in Discord other people like to be in Telegram. So last call on that. If you want to join the Edge Finder giveaway, the link is being dropped in the Telegram channel, and I will also drop it in the Discord channel just for people who prefer to use Discord. You can join us in either place. The point is, we just want you to join our newsletter and keep up to date with us in Telegram. Connect with us there. There's a lot of great value being shared by our team here on the Telegram side, and it's free to join. So enter for a chance to win. Maybe you'll win a copy of the Edge Finder this week. Okay, guys, up next, we've got Ivan FX taking over the show, of course, going over some setups that he's watching. Before we have him on, let me just mention also, if you're somebody who's interested in one-on-one coaching, check out Ivan for a little bit. He's got that's something that he does. So he specializes in helping traders one-on-one, working through trading psychology, working through finding strategy, and building out kind of their trading in a more meaningful way. So if that's something that you're interested in, we'll also drop the link to Ivan's YouTube channel where you can find information about where you can connect with him, speak to him one-on-one about the coaching services that he offers. And I've just from the numerous people that have worked with him and given feedback, they like his style. So if that's something you're interested in, it's something he offers, stick around, check out Ivan. He's got some ideas and setups that he's looking for coming in just after this. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
So, as Nick said, we do have, as well, group mentorship that we just had, 20 minutes ago or so, half an hour, sorry. Started about 8 a.m. New York time or 3 p.m. European time is recorded in Discord. And I really love it. It's been fantastic feedback and review this week. And what are we been talking about? Well, currently we're going through trading plans. Currently, how to build it, how to build your strategy, what is important, what is not. But more importantly, what is you guys struggling with? What is wrong with your strategy? Where can you improve? And it's up to you to tell me what you need, what you're struggling with, and what you're improving. But I really love that work because I've been through the works. I've been through, I don't know what you call it in English, through the internet of Forex, and I've done everything out there that might or might not work, and I've tried and tried and tried and tried and tried. Now for tomorrow and for the dollar, and I am unapologetic about being dollar bullish for tomorrow's CPI. And that is pros and cons in that. That doesn't need to be right or wrong. It's just that's the stance that I've taken. Now, that is because President Trump has led what I would argue a trade war against the world. And businesses in turn has then said, well, we don't necessarily believe that when we send our product from China, take it to America, we are guaranteed to know exactly what the tax is going to be when we import it. So they have said, we are not going to import, or we reduce our imports. What then happens is you get price increase in domestic America because what's the alternative? Is that US produced? Well, I don't know about that. Or the products that are left in the US have higher prices because they have less. They have more demand and less supply. Secondly of all, and I've seen that, I don't know how real this is and how bad this is, but I've seen a couple of videos lately about produce from South America going to Canada. I've seen produce in, is it North Carolina? No, sorry, North. What is that thing called? Notice California, yeah, California, North California, where you have a lot of your produce. It's not being picked because people are afraid or were afraid to leave their houses to travel to North California. So what does that lead? That leads to higher prices on fruits and vegetables and food. So by the end of the day, that's my theory. And I might be wrong, I might be right. And market for tomorrow has priced in about 2.8 headline inflation and about 3% core inflation. Now, if we get a higher than 0.1 or 0.2 difference, so if we get 3.2 or 3, that's going to have a significant change to dollar, is my belief, given the bearish outlook we have had because of NFP, because of the downgrades or the revisions. And I saw questions about revisions. Is that manipulated data? No, it's not. What it is that you take for NFP, it's a survey. So what happens when you ask real people? I don't know how many it is right now. Is it 17,000 or whatever or so businesses that you ask? What happens when you don't get all the answers by the limit that you have given them? Because it's every month. So what happens then is that data is then added into the next one, into next release, and then not added into, sorry, it's put into in the next release and released as a revised number, because what they do, they take a certain amount of group of businesses, and then they say that's the entire economy. So it's just an aggregate. It's just a small group that asked, and then they say this is the entire of America. But then if that is wrong, then they have to revise it, because it's better with a revised number than a wrong number. And that's kind of the theory, at least statistically. So with the revisions, that has been revised down to 14, down to 19, and then the number itself was 74. Now we'll see if it's going to be revised again next month. That's one piece of the cake. The other piece of the cake for the US, and I saw Nick say that we are well within cutting in September. I'm going to be the devil's advocate, and I'm going to say if tomorrow's US CPI is 3 headline and above 3 on core, that's not going to happen. I don't think Powell has the guts to do it, because we have small but rising inflation. It's a bullish, and according to Fed, it's an elevated inflation. Can they cut on elevated inflation? Why couldn't they cut when inflation was 2.4, 2.5? Why couldn't they do it then? Why now? Why is higher inflation a reason to cut? So, again, labor market was weaker. That's okay. That one I agree upon. But if you say that inflation is the single most important driver of interest rates, devil's advocate, just saying. So that's why I feel like we are bearish positioned on dollar, or Mark is bearish positioned on dollar, because of the NFP, and that means to me that if this theory about rate cuts is thrown out the window tomorrow, that is the potential for dollar to go all the way back to 1st of August high, which will be 100. So that's about 180 pips. That's the potential. What do you call it in English? I'm not going to say the word in English, but let's say powder potential. So that's why I say, for me, sorry, why do I hit you all the time? That's why I said yesterday I would really like a new lower low, either down to 1580 or slightly now down to 116. Have a pullback for London tomorrow, London Open. I'll take my trade. I'll take my bet. This is not financial risk whatsoever. That's what I would like to see. And then we get a new higher high on the CPI. Perfect. Yes, mate. If I'm wrong, I'll lose my pips. I'll take the tail between my legs. But that's my thought process. And why is that my thought process? Because I have traded. I have traded and tested so many CPIs. I don't know how many CPIs I've been a part of. it doesn't really matter. That's just the reaction. Okay, 180 pips by the end of the day. Not in the single move though, by the way, but by the end of the day, by the end of the week. That's the potential. Two things is, what about the next meetings after that? What about December? What about, is it November? What about the other meetings? Are we gonna price that out as well? Or are we gonna go back to, well, we think it's gonna go lower next time, so now we price in dollar bearish again? It's always about what do the market believe is going to happen to inflation in 3 months' time. And what is it now? August, so November is what we are pricing in now. And if inflation comes in higher tomorrow, we can't cut in September. We might cut in November. And we cannot have 3 or 4 cuts by December, because that needs inflation to start now. Because you need about 2 to 3 bearish CPIs. Just saying. So what if the headline is low, but core is much higher than expected? A deviation. That's always lovely. Now, what do we think is the most important one of them all? Let's go to Fed. And so how would I answer that with my own, without my own words and just by Fed? I would go to their summary of economic projections and I would see, what do they look at? They look at PCE, core, and inflation. So it doesn't matter. So by the way, CPI is a part of the inflation numbers, but they actually look at PCE more than CPI, even though the market looks at CPI. Now, PCE headline and PCE, or for that matter, CPI headline or core, they are equally important to me in importance. So if one is higher, one is on target, we are higher. If they are equally higher and lower, so 0, 0, where are we then? We are still at 2.8 or 2.9. We're still about 3 on core CPI. We are still elevated. The only thing that can save this situation, and how I really want you guys to think about it, is if CPI comes in about 2.5 or 2.7, 0.3 lower on the headline or the core, is a significant drop. Anything between 0.2, 0.1, 0.2 and 0.1, small change. But anything larger than 0.2 is a significant change. And that is something to look into, because that's like a drop in inflation. And then we are dollar bearish. Also, then market is dollar bearish. Then gold goes to new highs. I saw a question earlier that what happens to gold? What is gold going to do? I also saw a question about copper. Okay, what happens to other asset classes that is driven by dollar? Well, if you have tomorrow a lower CPI, anything below the previous one is going to be looked at as bullish. Why so? Because gold is driven by a couple of things. Number one, fear of recession. And how do you know you have fear of recession? Falling inflation, falling GDP, falling labor market. Okay, that fuels gold. Number two, we have, I would call it quite a rocky environment at the moment, quite risky. So that also fuels gold. In central banks are buying gold. Now, I saw a comment about the tariffs being put on gold going into America. I actually do not know how that's actually going to depend, how that's actually going to make gold, other than potentially making a higher price. That's an assumption that every time gold goes into America, yeah, I don't know. I can't really think about it too much here because it will take me too long time. So the thing is, and then the third one is China has been doing quite poorly for 2025. That also is a driver in itself, and other and other traders and hedge funds that is feeling like, hey, what happens in North America whatever happens in North America is making us scarier or shakier that our profits are not guaranteed. So we need to put into something that is not necessarily US based or North America based, but something that would continue to give us profits and continue to give us some kind of hedge without losing money. Make sense? So, for tomorrow, there's an RBA meeting. I believe, that doesn't need to mean anything, but I believe, just a little prediction that I think Australian dollar, US dollar is going to fall, then rise. So against the dollar tomorrow is not necessarily what I think is going to be the best move. Secondly, if you are a dollar bearer, this is a great opportunity for price to come higher to look for shorts. So whatever your entry reasons are against whatever I believe, and it doesn't really matter, you are at least now getting a better price. I do not believe that 98.76 by any means in any shape or form is going to hold. That is not a great resistance, but it's a resistance. So if that's where we are and we get CPI lower, I'm just mentioning it to you. So right now, getting a better price, you then hope and pray on your knees and toes and hands that this thing go as high as possible before the CPI. What about what about copper? To me, I would investigate what happened there because that's a big drop. That is a significant drop. What happened to copper here? That's a structural change. I do not want to be a part of that. And then the question to you is, you asked about longs on copper. Number one, and I think for copper is if we have higher inflation, if we go back to 2022 or so, in the United States, is that a driver of copper? Do copper thrive, from about June 2021 or so? That's about there. And then inflation peaked about September 2022 or something. Not really. And we started increasing interest rates about March 2022. Not really. So what do you really want to see? And this is just by looking into it. And there's also the war in Ukraine there as well into that little world. And inflation, I would say inflation lower is good for copper of the United States of America, given this chart. So you should hope for lower than expected oil dollar CPI tomorrow. Sorry, but I wouldn't be a part of this situation because of the structural. If you drop 22%, you drop down, what is it? 1,729, 12,000 pips in I don't know how many hours or minutes or seconds that is. That's structural. That's a structural issue. So I do not like that. Why I do not like that? Well, obvious reasons, right? Okay, it's no, thank you. That's 1 minute. My bank account can't hold that amount of money. Too much for me. Do apologize for that. But if you find it, then totally up to you. So going back to where I wanted to be. Yeah, cool. Is dollar strengthening. Okay. Now, right now, we have a bit of dollar weakness. I see that. Well, I really wanted them to lower price on euro. If we could just have a new lower low, then that would be lovely. The same thing for New Zealand. This is better. Love it. Have a pullback. Have a great time. So the setup that I put up in the mentorship meeting a couple of minutes, some hour ago, is I want this new lower low pull back, and 59.5 is not necessarily set in stone as that would be my entry, but somewhere in that region. Stop loss should be above the previous high or a bit higher. And target is, I've set it to about the previous high or low we created after the rise. But of course, what I hope and pray for is we're going down to 58, 50 or 60 or so, down to where the idea about rate cuts came in tomorrow, if we have a much higher than expected inflation number coming out. And by the way, on my risk management, I don't lose much money on this. It doesn't really matter to me because I know it's risky. I know it's not something that I can count on, and yeah, it's by the end of the day, it's just a scalper theory. For S&P 500, for the stock market, I said when this happened, I said I wanted a much lower price. And I can't say I knew because I didn't know, but I really wanted a much lower price, and I didn't get it, and the price went higher. Now that becomes the issue of how do you deal with that is you deal with that by having trades from before from lower prices, and kind of the lesson from 2025 is when Trump says that he is going to postpone the tariffs, if he does it again and again and again and again, and the market does react quite aggressively lower, that's kind of the signal to start looking for buys, and it's going to be quite aggressive. Now, for me, I am just, what do you call it? I'm just a general buyer here. I'm not really into trading it per se, as other than just holding it for as long as my brain can tell, my brain allows it to, and my mindset allows it to. Other than from 3,000, 2,000, from all these lower prices, and in the grand scheme of things, I really do wish that we can get a deeper pullback here in about now, in about September, in about August, before reaching higher. If this is the case, we will just reach higher. We'll always just reach higher. That's how the stock market is built, to always go higher. What about recession? What about stagflation? What about crashing? What about the credit card crisis that are currently in America? What about all the crises? Well, that should be the reason for why it falls, shouldn't it? But if you're going to wait for a crisis, if I'm going to say there's going to be a crisis going forward, we are always going to be waiting for something that doesn't happen until we actually have a crisis, and then it does fall faster than I can say poof. And then we have 20, 15, 10% pullback. I don't know what that is, but that's a couple of the situation is. So that is my trade plan from about, I think, last week or so, for dollar Swissy to go higher. Now, dollar Swissy for me is, I really want Swissy to be weakening, but it's been really strong. So I don't know how that fits into my world, because it has been just a range in the last week, and then it woke up this week and said, let me go higher. I do believe, I can't guarantee that that's the truth, but I do believe that there might be some S&B into this, because the market wants yours with it? No, okay. Okay, Is it C? No. Is that wrong? Cool. That is, it's not C, it is S. Okay. So it has been quite strong, and now the future is finally starting to fall again. To me, the strength that we have seen hasn't really been justified in my world, but maybe it now can have a better world, and the strength is probably here back in June and July or so, where we put interest rate to zero. So, or was expecting at least zero interest rates, and then the market just kind of took off from there. So for me, dollar Swissy higher is the way, is the road. It's currently where it's going. I didn't take a trade on it, but I don't know. This chart here isn't in my books of favorite trade setups ever that I really want to look at. Okay. So for me, S&P 500 higher. For me, dollar higher. For me, I didn't mention it, but also yen pairs at some point higher. Then there is then there's the case of then increasing interest rates in Japan. Well, I don't know, why haven't they done it before? Why is it now? Why does it take them 3 years to realize that we have been above their target? And secondly, or thirdly, or so, I do believe that tomorrow at London Open, hopefully I'll get some trade-ins on Euro and New Zealand, and we will take a look at what Aussie does to the market tomorrow. They do cut, is kind of what's expected, and then if they don't, that's bullish. And if they don't say that they're going to continue cutting, then that's also bullish. So to me, kind of expecting dollar to continue higher. So I think that's more than. Is that more than it for me, Chandler? Is there anybody else after me? Oh, you're funny. Okay, cool. Family, I love you. And number one, don't do anything I wouldn't do. Number two, take care. And number three, be objective. Whatever the data tells you, if you're wrong about trades, okay, don't give up. Don't give up. Don't give up. Look at Nick. Look at me. It's worth it in the end, okay? Boom. I see you in the next one.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.